Got it. So maybe a good bridge is to talk a bit about India, because you said the system is, of course, expanding, and one thing is, of course, having sort of an Indian company, but also going into the infrastructure space as well in LPG. Maybe we just start. Maybe the first question, India in general. I mean, the answers are somewhat obvious, but still, can you tell a bit about your experiences building in India? What makes it a unique opportunity? Any lessons learned before maybe diving into infrastructure, LPG,
sure,
as a second leg?
So before I started, the company had already expanded in India into the Indian market with building up a subsidiary, BW LPG India, also with partners, which is an entity with Indian flagged vessels, and then you are regarded as, it's run out of India, Indian flagged vessels, and it's regarded as an Indian entity which can apply for subsidies, and you have right of first refusal on certain tenders and so on. So, India has had tremendous growth in the LPG demand. So on the back of that, we were very well positioned to participate in that growth. So it went from 2 ships up to 8 ships within a few years. And it's been a fantastic journey, because the Indian LPG demand required more ships on the water to basically ship all the LPG from the Middle East. And this is a time charter market, which is also, like I said, fitting very well into that coverage story, time charter coverage story that the company wants to have as a hedge operating in an otherwise very volatile VLGC market. And so we've had a very nice journey on the shipping side in India, and it's been working really well, and still is. And we believe in that LPG story in India, because as the population is growing, the level of prosperity is growing, they need more energy, and LPG fits very well into that energy mix also in the future. And then we looked at whether we should expand our footprint also to onshore infrastructure terminals, which is not something, entirely, it's not a new idea. If you look at the industry as such, you have companies like Vitol, Petrodec, and obviously other oil majors and so on, with onshore assets which they trade around. So we teamed up with some very good partners in India, and they had a site outside Mumbai which could be very suitable geographically for imports of LPG from the Middle East. And the idea was to build a modern VLGC suitable terminal together with partners to source LPG into that very populous part of India. And then what we unfortunately realized as we moved forward was that it became slightly more expensive than we anticipated. We had also the geopolitical, events which I mentioned, with the Liberation Day and the retaliatory Chinese tariffs, where when these things happen, at the management level, you start thinking, okay, now we really have to focus on the core business and what really creates value for our investors and shareholders. And this was a very small investment for us. Actually, this terminal investment was $10-15 million size investment, which required quite a lot of focus and efforts and time from the management as well as the board. So compared to the balance sheet, it was a relatively small investment, but the time we spent on it was not really something we could justify when so much happened in the market at the same time, and you start thinking about, okay, what's how are we going to position and kind of rig the ship for the future, right? If suddenly the market turns around. And these discussions led to a very quick turnaround for us because we just wanted to make sure that we spent enough time and had enough focus on the shipping and the trading activities, which is the main value creators in our system. And we are, after all, a relatively small organization, and a greenfield project like we embarked on requires, you know, a lot of attention, resources, and time from the organization, which we just had to be, you know, very clear on. Sorry, but we are not able to follow up on that, and we had that kind of, the timing was quite, let's say, good, because we hadn't spent any money yet. So we could still make that turnaround without having spent a lot of money and you know, and time and efforts. So we could move on without having a lot of sunk costs.
But to summarize, is it like, as a shipping company, and simplifying it a bit, if you go into the infrastructure projects, like for instance, CMB Tech does in Africa, because they want the fuel, they want to see the development. So in LPG perspective, if you're involved in infrastructure, maybe it gives you a second leg to stand on. If you ensure that it's high quality, it makes it easier to, of course, fulfill it with LPG as well. So you sort of get that, you know, you get more control on the system. But the downside is that costs can get out of hand. It's not really comparable to trading ships and doing shipping. So you sort of have to put different gloves on. And is it like, is that the dilemma, or is it other parts playing in? If you should go in the infrastructure route and rather, or just stay shipping, and that's the only thing you're going to focus on.
I think we have also realized that, you know, greenfield terminal projects require a lot of engineering project experience, and is like I described, very time consuming also for the management and the board of directors. And I think our company is more, I would say, commercially savvy than engineering savvy, if you know what I'm alluding to. And I think for us, if we are going to invest in infrastructure going forward, it would be with a partner who builds the terminal, and then maybe we would like to have an investor like ourselves, where we can also utilize and kind of add on with our commercial position on trading and shipping. So I think we would probably structure it differently, have a you know, less involvement in the construction of a terminal, because we have realized that that's not really where our strength as an organization lies.
Interesting.